We're going to be discussing this Lululemon trade that I took, 310 strike call options, and we're going to be discussing the plan, the thesis, and my reaction and the overall result. The result was I entered at 11:07 on January 26th and exited the following day about a 22% profit. The plan originally was to target supply overhead. That was an area where sellers were at 313.1, 315.43, 318, and 329. And the plan originally was to enter when the equity entered 306 and a quarter. And at the time I entered the call position, which was at 11:07, the stock was trading at roughly 307.6. As you can see, a little bit of downside as the buyer was leveraging his position, and I ended up exiting these call options the following day at 7:10 a.m., which is about right here at about 311. So from entering over here at about 307 and 0.6 to 311 and a quarter, it was a roughly 4-point move to the upside, and that was the plan. The thesis was the S&P 500 fell in the middle of the session the previous day, or no, on the same day, um, in the middle of the session, and it broke a lower day. And in the lower day breaks, there are lots of retail traders shorting, which is an amazing place for a major buyer. For liquidity purposes, this major buyer stepped in, which made me bullish on the overall market for the following day, which is exactly what happened. The S&P 500 rose 0.25%, and the session highs were about 21 points above what it closed at. So the buyer on the S&P 500 was there. The seller on the yield was there, or was present, and there was a buyer on the Lululemon shares that was present as well. So, and for context, there has been lots of negative news from analyst downgrades, and it was just really interesting that there was a major buyer present despite these major analyst downgrades. So I hopped in this area where the buyer presented himself, and I rode it to the top for about a 4-point gain. The reason I ultimately ended up closing this position was because about here where I exited, the S&P 500 future was reaching to 4,100. I just did not feel comfortable holding in an area that was a psychological number where a lot of traders were going to be looking at, and I held here because the S&P 500 was in demand and sellers were present on the yield, and that is why I sold over here as opposed to selling for a small loss down here. Buyer on Lululemon was present, buyer on the S&P 500 was present, and the seller on the yield was present. And the plan ended up working, and it ultimately resulted in the 4-point rally. The original plan was to sell at 313. I exited early because, as I mentioned, the 4100 area on the S&P 500 future was about to break, and and personally, I just don't like the selling activity that I saw here. And upon recognizing that there was a seller at the open in this area at 311 and a quarter, I exited the position because I took the profits, and the profit was, like I said, 22%, which was roughly about $100 profit per contract. And it ended up netting me about just under $50,000 on this individual paper trade. And for context, I began last week with $250,000 in this paper trading brokerage account. And so far, what I've been learning is just formulate a plot to enter stocks, exit them, follow the plan, and stay in the moment. You need to react because if you predict, you will not get the predictions correct. You need to react, and the only way to be consistent is by reacting. Just be aware, alert, and react. And that is the best way to catch market moves, just like how I've been doing for the past two. Previous one, I caught the Microsoft bad earnings, and this one catching a 4 point move to the upside on Lululemon. And again, what made this trade pretty good was that I exited as soon as I saw the seller. I reacted, and the calls were in the money when I exited, which is a win-win. Where if you wanted to exercise the options, you would have been able to. And what ended up happening was stock sold off, and the buyer actually showed up again after I sold off. But for the context of my position, it was best selling in order to minimize risk to the downside. And that was my plan. That was the thesis for entering. And yeah, everything was working good. And that's what I learned. Just react and just be present in the moment and just be consistent and always watch the S&P 500 for buyers and sellers. Until next time, I'm going to keep on producing these videos and publishing them. And yeah, I'll see you guys around.